Hello and welcome. I'm Tamina Theis from BlueOrchard, and I'm joined today by our Head of Investment Solutions, Philipp Müller, to talk about recent market developments. We also have the pleasure to welcome our Senior Investment Officer, Njeri Kirumbi from BlueOrchard's Nairobi office, to provide her views on digital finance. Hello Njeri, hello Philipp, thank you both for joining me today. So let's start with the latest market developments in emerging and frontier markets. Philipp, can you talk to us what these were?
Sure. So in the first quarter, we saw broad signs of recovery and stabilization of emerging markets with, I would say, stronger than projected growth and also some signs of a reconciliation in the US-China trade war rhetoric. This led to higher investor confidence, but also to some risks, given that a fairly optimistic outcome was already priced in. In the second quarter, we saw the trade war flaring up again on multiple fronts. This led to higher volatility in the market and also to some capital flows out of markets which have a higher exposure to US policy.
And what is your view on the current investment environment?
With inflation expected to converge with the central bank 2% target and the Fed rates on hold or likely to be lowered, we see that credit spreads are much more attractive. Also, we take a market-by-market view, and there we favor countries with strong domestic growth and solid fundamentals. Luckily for us, many of the countries that we invest in fit that description.
And on the microfinance side?
There we position our funds to provide stable returns, also in times of higher volatility. And luckily there we benefit from the historical low correlation of the asset class to public markets. But also on the impact bond side or green bond side, we see that valuations look much more attractive than a few weeks ago.
And do you see any big shifts in emerging and frontier market economies?
We see less big shifts, but we see marginal and gradual improvements, for example, in Brazil, or deterioration as just seen in Mexico. And also we see that there's credit risks, mainly in countries, smaller countries with higher exposure to political and economic instability. And there we see that the hotspots are at the moment Central America and Sub-Saharan Africa. But we also see positive signs, for example, in India and South Africa, where the recent election results provide for some stability.
And are there any major trends that you observe, especially with regards to the markets that BlueOrchard invests in?
There's a key trend that we can observe, and that's digital finance. There are certain markets where this is developing rapidly or even leapfrogging, notably in Africa, and there I would be very interested in Njeri's view.
And Njeri, what is your view on the digital finance landscape in Africa?
There's no doubt there's significant opportunity in Africa in the digital finance space. According to our assessment, banks in Kenya, South Africa and Ivory Coast provide the most sophisticated digital banking offerings. We also see that Zimbabwe has increasingly embraced the ease that digital finance brings. Looking ahead, we think Uganda and Tanzania have strong growth potential. In these markets, digital infrastructure, for example, mobile phone and internet penetration, is strong. Cash also remains important, and digital finance penetration is low.
How do you assess the market growth?
We see 4 key elements: existing digital finance market, digital infrastructure, mobile penetration rates, and local cash usage. However, there's a widespread utilization across our universe. For example, 90% of transactions value in Zimbabwe are already processed electronically, and actually in other markets this figure is much lower.
What is the value add of digital finance in Africa?
Our experience in most advanced markets, for example here in Kenya, suggests a positive long-term impact. Firstly, it improves operating efficiencies, which allows financial institutions to upgrade their capabilities to respond to the market needs as well as prepare for the future. Secondly, digitalization contributes to greater financial inclusion through its affordable and instant services, which has increased availability of financing, for example, for education purposes or small and medium businesses. On the other hand, we also note that there are challenges in the digital lending space that still have to be tackled. For example, lack of transparency, regulatory policies, and credit pricing.
And in your view, can digital finance and mobile money actually coexist?
The experience in Kenya and Zimbabwe suggests that mobile money, dominated by telephone companies, and digital finance can coexist for now, as both are still mainly taking market share from cash-based transactions rather than from each other. We see some competition growing, and industry players are likely to keep fees low and invest in product enhancements, which benefits the end consumers. All in all, our view is that Africa's leapfrog, combining finance and technology, will support BlueOrchard's investment case in the region for years to come.
Thank you, Njeri. Thank you, Philipp. Thank you for joining me today, and thank you for watching. Please reach out to BlueOrchard's communications team for any questions about our company or the subjects discussed today.